How central bank digital currencies could monitor your personal spending habits. Imagine a world where every coffee you buy, every online purchase, and every tip you leave is not just recorded by your bank, but by a digital system controlled directly by your government. Central bank digital currencies, or CBDCs, promise convenience and security. But behind that shiny veneer lies the power to track and analyze your personal spending habits like never before. In this video, we're diving into how these new digital currencies could quietly monitor your every transaction, why it matters to your freedom, and what the big players aren't telling you. If you're curious about these hidden mechanisms shaping the financial world, hit that subscribe button for more. What are CBDCs and why they're emerging? Central bank digital currencies are essentially government-backed digital money. Unlike Bitcoin or PayPal, they are fully regulated, fully traceable, and directly issued by a central authority. The reason governments are exploring CBDCs now isn't just to modernize payments. It's about control, data, and strategic influence. Traditional cash allows anonymity. Digital currencies remove that veil, giving central banks the ability to see patterns in spending, saving, and even who you interact with financially. Why it matters. This changes the concept of money itself, from a neutral medium of exchange to a tool that can reveal private behavior. What they're not telling you. Behind the convenience of instant transfers and easier cross-border payments is a powerful surveillance tool. Countries piloting CBDCs, like China with its digital yuan, are not just testing payment efficiency. They're mapping citizen behavior at an unprecedented scale. Narrative context. Historically, governments have used taxation and reporting to track money, but CBDCs make this real-time and ubiquitous. Imagine your every transaction forming a permanent digital footprint that can be analyzed by algorithms to detect patterns, risks, or even undesirable behaviors.
So, are CBDCs just another form of digital payment, or something more?
They're more than payment. They're a financial lens into individual behavior, giving authorities insights and influence over personal choices. How CBDCs could track your spending. CBDCs operate on digital ledgers. Every transaction leaves a trace, from buying groceries to sending money to friends. Unlike current banking systems, which can aggregate data, CBDCs can provide a microscopic view of each person's lifestyle. Why it matters. This level of insight could enable targeted financial policies or restrictions. Imagine incentives for good spending or penalties for undesirable purchases. Governments could influence behavior directly through money itself. What they're not telling you. The technology isn't just theoretical. In pilot programs, digital currencies have been used to monitor consumer behavior in real time, offering central banks the ability to identify trends, predict economic shifts, or even flag individuals for review. Context. In China, for example, the digital yuan has already been integrated with apps that allow monitoring not only of transactions, but also of geolocation and spending frequency. While framed as modernization, the underlying capability is a form of mass behavioral surveillance.
Could this level of monitoring be abused?
Absolutely. The same systems that optimize economies could also impose restrictions or social pressures, subtly shaping behavior without citizens even realizing it. The power dynamics behind CBDCs. Central banks aren't just financial institutions. They're instruments of national strategy. Introducing CBDCs strengthens their control over liquidity, inflation, and even international finance. Countries with early adoption gain a technological advantage in monitoring both domestic and foreign transactions. Why it matters. CBDCs are not neutral. Whoever controls the ledger controls insight and influence, creating a new dimension of economic power. What they're not telling you. The global push for CBDCs is backed by elite financial institutions and policy think tanks, each with a stake in centralizing digital monetary infrastructure. Decisions are rarely about citizen convenience. They're about consolidating authority and strategic leverage. Context. Historically, the shift from gold-backed currencies to fiat money already increase central bank influence. CBDCs take this further. Now central banks can see economic activity in near real time, offering a form of soft control unprecedented in history.
So is this just financial evolution or a shift in power?
Both, but more significantly, it's a shift in power. CBDCs give authorities tools to monitor, predict, and potentially influence how citizens use money. The hidden risks to privacy and freedom. The most discussed risk isn't theft or volatility, it's privacy. CBDCs remove the anonymity cash once offered. Every micropayment, subscription, and donation could be logged and analyzed. Why it matters. In an age where personal data is already a commodity, CBDCs could turn every financial interaction into a permanent government record. What they're not telling you, beyond tracking spending, these systems could integrate with other datasets, social credit, tax records, or health data, creating a holistic view of each individual's behavior. The implications for civil liberties are enormous. Context: surveillance capitalism has conditioned people to accept tracking for convenience. CBDCs merge this trend with state power. Unlike commercial apps, central banks aren't subject to market competition. They have legal authority, making opting out nearly impossible.
Can citizens realistically avoid CBDC surveillance?
Very few options exist. Unlike cash, digital currencies are compulsory in many models, meaning opting out is difficult without losing access to essential services. The global strategic race. CBDCs are more than a domestic issue. They're part of a geopolitical race. Countries leading in digital currencies gain influence over international trade, payment standards, and cross-border capital flows. Why it matters. Economic dominance now depends on who sets the rules for digital money. Early movers like China or the EU could define the architecture of international finance for decades. What they're not telling you, this is not only about efficiency, it's about digital supremacy. By controlling CBDC frameworks, countries can exert soft power over allies and competitors, potentially even blocking or incentivizing economic behaviors globally. Context: think of this like the early days of SWIFT and global banking. Control over infrastructure translates into strategic leverage. CBDCs extend that control into direct citizen-level influence, but on a global scale.
Does this mean your spending habits could have international consequences?
Indirectly, yes. As countries adopt CBDCs, your transactions could be analyzed not just domestically, but within the frameworks of global economic strategy. Balancing innovation and oversight. CBDCs offer real benefits: faster payments, reduced costs, financial inclusion. But these must be weighed against risks to privacy, autonomy, and systemic power concentration. Why it matters. Without strong oversight, CBDCs could shift from neutral money to a tool of social engineering. Citizens may unknowingly trade convenience for constant surveillance. What they're not telling you. Many discussions focus on technical implementation or convenience, not on civil liberties, behavioral influence, or long-term strategic consequences. Context: some countries are exploring privacy-preserving designs, but the tension between transparency for governments and confidentiality for citizens is fundamental. Policymakers, technologists, and the public will need to negotiate this balance carefully, because once these systems are widely deployed, rolling them back is extremely difficult.
Can we design CBDCs that protect privacy?
Technically possible, but politically difficult. True privacy would limit government insights, conflicting with the strategic motivations behind CBDC deployment. The future you may not see. CBDCs represent a transformation in how money, data, and power interact. Convenience may lure adoption, but the unseen implications affect privacy, autonomy, and global influence. Why it matters. Understanding CBDCs isn't just about finance. It's about your daily freedom and the strategic direction of nations. What they're not telling you. The public conversation often overlooks subtle forms of control embedded in these digital systems. By the time awareness spreads, policy and infrastructure may already be deeply entrenched. Context: from cash to digital wallets to CBDCs. History shows each financial evolution shifts power. The current wave promises efficiency, but also unprecedented oversight. How society responds will shape the next era of economic and personal freedom.
Should we embrace CBDCs or resist them?
Awareness is key. Embrace the innovation with caution, demand transparency, and push for systems that balance convenience with fundamental rights. Closing. If you found this exploration eye-opening and want more insights into hidden mechanisms shaping our world,